All right. It's 8 o'clock. We'll get started here. All right. All right. So this evening we are going to go over the topic cash flow in Coeur d'Alene, how to find deals in North Idaho. Something that, we're passionate about as realtors, but also as investors. And so, yeah, we're going to go over some different strategies, different asset classes that we could be looking for in Kootenai County, and then also some different financing strategies, and then some action steps that we'd like to encourage you to take. So we will just jump right into it. Yeah, and thank you for joining us tonight. Yeah, we're excited to share. Okay. So a little market snapshot of Coeur d'Alene, Kootenai County. We've seen strong growth trends, of course. Median home prices are increasing. Rise in inventory. We're going into the fall and the winter, so that'll taper off some for the time being, just seasonality. But very strong rental demand, and then that creates it to be an attractive market for investors. So currently, with the total market analysis, total market overview of Greater Coeur d'Alene area, at least single families, homes, there's 2,462 homes listed. 700 of those, 717 are pending currently, and then 29.1% ratio, pending ratio. So that means if 717 out of 2,462 homes are pending, that means that 29% of homes on the market are currently under contract. And when we look at that number, about 30% is a balanced market between buyers and sellers. And so that we're a little bit under 30%. That means, it's a little bit to favor of buyers, but not necessarily. And if we look at a broken out total market overview, it really varies depending on price point. So this is just aggregate for the whole market. But some price points, especially in the higher price points, you see that penny ratio drop lower. And so, houses that are higher in price, are more advantageous to buyers getting a better deal now than maybe sellers or in a different price category. And so we see 89 days on average for the average days on market. So that's a little bit inflated with, new construction that sits on the market just, naturally longer because it takes a while to build and, people aren't going to go for it right away because it's, maybe 8 months, 9 months out. So average days on market is probably a little less than that. That's a little inflated, but, hopefully gives you at least some reference point. We're seeing, inventory in the market, inventory sitting longer than maybe we historically have in Coeur d'Alene. And then we see prices, that are high and we see prices starting to drop. So we say that, it's kind of a mismatched market. Sellers, are trying to ride the coattails of the COVID highs, price highs. And so, but we see that, buyers are rate sensitive. And so there's not a lot of buyers really active, strong in the market right now because rates have been historically high and sellers are trying to get as much as they can for their houses. And so when we see not enough buyers for the sellers that are on there, prices have started to drop. Sellers that maybe overpriced their homes because they were hoping to get top dollar are starting to come down. And we've been seeing some pretty significant price reductions over the last weeks and months. And so, especially the last weeks, we've seen some, $100,000, $200,000 price reductions on some, more expensive listings, of course, but significant price reductions across the board. So if you're a buyer, we really recommend you getting ready to, if you're looking to invest soon, we recommend getting ready because if rates start coming down, more buyers will jump in because buyers are rate sensitive. And so we do see a good amount of deals in the market right now. If you're a buyer, to get ready and to be able to pull the trigger quickly because there are deals to be had out there in the current market. You have to look, but they're definitely there. So we wanted to go over some strategies and asset classes tonight. So basically different types of investments that we can be looking at in Kootenai County. So we have RV and mobile home parks, self-storage, single-family homes, multifamily like duplexes, triplexes, fourplexes, and apartments. And then we have co-living, which is a maybe more unfamiliar strategy, but we will go over that in a bit. So we have RV and mobile home parks. These have some really strong points. Affordable living, there's high demand for affordable housing, especially in Kootenai County. When we look at rents and even price to buy, the amount of people that, income for people in Kootenai County versus home prices, it's, pretty astronomical. And then even rents, have been increasing significantly over the last 5, 10 years. And so affordable housing is in high demand. So mobile home parks, RV parks can really provide that for people. Um, Even especially mobile home parks having some sense of like some feeling of ownership of a home. People who prefer, especially RV parks, a flexible housing, maybe they're here for a couple months at a time, or maybe for 6 months at a time, or a year at a time, and moving around the country. So diverse choices for residents looking for mobility. They don't know how long they're going to be here. They can put their motor home or their RV or their trailer there for however long they want or need, without really having to commit. So that's a great option as well. And then steady income, especially mobile home parks. Mobile home parks have very low turnover. RV parks have higher turnover, especially in areas that are seasonal, like Coeur d'Alene. We get winter, so people with RVs maybe go south. In like Texas, RV parks have less turnover, because it's warm and they can just park it there all year round. But mobile home parks here in Kootenai County, incredibly low turnover because it's so expensive to move a home. It's so expensive to get your home moved there, and then to move it out of there is pretty difficult. So if you look at the stats, I don't have it right in front of me, but pretty significant pretty significant amount of tenants just stay there for decades. And so it's a great asset class to have. You own the land, they rent the land from you, which is amazing. And a lot of times, parks can either own the homes or the tenants can own the homes. Um, some, you know, in the past, more maybe parks have owned the homes. I see a lot of people going towards tenant-owned homes where the owner of the mobile home park only owns the land and the tenants rent the space from them, and then they own the home on the property. So they're responsible for all the maintenance, upkeep, issues like that. And mobile homes are depreciating assets, so it's not necessarily something that you'd want to own. If your tenant owns it, they take care of it, they deal with it. That's awesome. And so, some drawbacks to RV and mobile home parks are the higher entry prices. They're more expensive, especially in Kootenai County. People want to be here, they want to live in those, and so they are much more expensive, typically to get into, especially for newer investors or less experienced investors or people without tons and tons of cash. The price point is higher. I do know people that have raised funds to purchase a mobile home park or RV park. Say if it's $1 million and it's, 300 down or 400 down or 200,000 down, they'll raise that amount for the down payment and they'll offer equity in the park to the people who fund the down payment. And you can also raise funds for CapEx expenditures or repairs that are needed. So you can raise the money to purchase it and give equity to the people who invest in that. And you can pay them, a certain amount of interest that you'll get from, your monthly rents. You can pay them interest on the amount that they lend to you or give to you or invested with you. So there's a lot of different strategies or structures you can do to get into a mobile home park or RV park, but the entry point is generally higher. Self-storage is also a great option. Easy management, lower headaches with tenants, lower operational challenge. You just have a bunch of storage units. Not a lot of moving parts there. A variety of use, adaptable storage solutions for various needs. You can store stuff like in these units. You can store boats in the yard, store RVs, store vehicles. There's a lot of different types of storage. You can have cold storage, climate controlled storage, not climate controlled storage. Lots of different options there. And also low turnover. People usually rent their storage units, for a long time. Maybe if someone's moving and they just need a storage unit for a couple months, that's, a situation. But oftentimes, people just have ongoing storage needs. Um, one nice thing about living in America, we just have a ton of stuff, so people need places to put it. Drawbacks is oversaturation in certain areas, and also higher prices to get in. Either higher price for the land if you're going to build it in like a highly trafficked area, or higher price to purchase one because people, they know what they have and they generate cash. And so people will ask for a lot, if you're going to purchase one that's already made. Um, and then another drawback, sorry, for mobile home parks I missed was management intensity. Managing a mobile home park or RV park can be pretty intense. It can be, a lot of work. So you're going to need an on-site manager, either someone that lives there or someone that lives nearby so they can be there consistently. And then regulatory issues, keeping up with codes, keeping up with permits, keeping up with, depends if you're on city utilities or if you're on well and septic. If you're on, city water and sewer, that's great. If it's a well and septic, that's going to be more difficult. So there's a lot of different things to keep up with in terms of that for mobile home parks, potentially depending on your utilities. So yeah, and then that is it for self-storage. Single family rentals, very easy to manage. You just usually have one tenant or, one family. They're simple structures. You've got one roof, one water heater, one furnace, one AC, so your scope of what could go wrong is more limited. Um, and so, pretty simple, straightforward. You have your house, you rent it to one family, and that's it. Stable income, usually you do 12-month leases. It's predictable. You kind of know what you're getting into. It's just straightforward. You have a solid lease in place. You vet your tenant, well. You ask, you have your standards for your tenants. And so it's pretty predictable, especially if you have a property management company. It's great. I have one of these. I don't think about it ever. They take care of everything. I don't think about anything. Um, Super easy for me. And then resale flexibility, compared to a mobile home park, compared to an RV park or storage, where it's much more difficult to sell something like that. Selling a single family home is really easy. It's one asset, it's one building, not usually probably a lot of decision makers are involved. If you have other investors in your other, mobile home park or storage, you're gonna have, more decision makers potentially. With a single family rental, you want to sell it, you offload it easy. Um, and then in Kootenai County, there's tons of demand for single family rentals. Currently, drawbacks, it's hard to get good cash flow if you're going to finance it. So unless you're putting a lot of money down, it's hard to have it actually cash flow month to month because of the costs of homes, compared to rental prices. So a lot of the houses that I look at, if I'm looking at, okay, I'm going to get a loan on this, even 20% down, doesn't always cash flow great. And then your cash on cash, your COC, return is weak if you're buying with cash. So let's say you buy a $500,000, $600,000 house all cash. However much you're going to get in rent back every month isn't necessarily a great return. If you're going to tie up that much cash into one property, the amount that you're getting, whether it's 2,000 or 3,000 or 4,000 back every month, might not be a good use of all of that money. So it'd probably be better to leverage it, get a loan on it, and put as little down as possible. But then at that point, sometimes it's hard to cash flow. So then you have to look maybe more of an appreciation play. And that's never 100% clear either. So single family rentals can have great opportunities, but can be tighter in this kind of market if you're just renting to one tenant. Multifamily, great opportunity, great asset class, scale benefits, lower purchase price per unit. You can attract more renters. Um, it's also cheaper for you. You can get more units, a fourplex or a fiveplex, you can get more units at a lower cost than just buying, one single family rental is one unit. If you get a duplex, triplex, or fourplex, you can get more units for less money. Um, and then they can also get better deals. Renting a duplex or triplex or fourplex is cheaper than renting a single family home, and maybe better than renting an apartment for them. But then you also have convenience. You're attracting tenants who want low maintenance living. So you're going to want people that don't want to do a lot. So there's a lot of people that will want to live in your type of housing. And if they can't afford a home, they can't afford to rent a big home, they can't afford to buy a home, there's going to be a lot of demand for that as well. Drawbacks in Coeur d'Alene right now is that it's expensive. A couple of years ago, we were looking for a new house and we thought about buying, a triplex or a fourplex as our primary. Um, and it was expensive. And we ended up not going that route because it was really expensive for something that needed a lot of work. It was $1 million for a fourplex that needed to be completely renovated. Um, and then you also have competition from bigger buyers, especially for apartment complexes. That's going to be a lot of money to get into it. And then there's going to be, bigger investors that have more resources than you to get into it. So, yeah, higher competition and more expensive for multifamily. So this is one I really like, co-living. And so it's basically where you have a single family house or a duplex or triplex or fourplex, but usually a single family house that has a good amount of square footage, and you do basically rent by the room. So it's like a single room occupancy model where you're just renting out individual rooms to individuals on a monthly basis. You can do a year lease, a 6 month lease, or a month to month. And basically, if it's a 4 bedroom house, you rent it out to four different people. The price per room varies on the size. If it's a master bedroom, all those things come into effect. But basically, it's a way to actually like get 1.5 or two times more rent than just renting it as a standard family, single family rental. So instead of renting let's say a 4 bedroom house to a family for $2,000 to $2,500 a month, I could get 4 to 5, maybe even 6,000 renting it to individuals. And especially if we start looking at like adding rooms in those kind of situations, you can add rooms. So if you have extra living spaces, you can divide those into extra bedrooms, put up walls, um, and rent them out that way. So I know a handful of people doing it that way and they love it. It also solves affordable housing problems for people, especially in Kootenai County, Coeur d'Alene, high service industry, a lot of people who are in service jobs, blue collar jobs, a lot of, single individuals, young people who can't afford an apartment, can't afford a house, especially if it's just them. So it's a great opportunity, to rent a bedroom for 700, 800, $900 a month versus, a $1,500, 200, $2,000 apartment. So you're solving, a big problem for people. They still have access to a kitchen, they have laundry, they have all the things that they would in a house. But if they don't need a lot of space and they just need a bedroom, it's perfect. Then in some situations, you're creating a cool social environment, community. People aren't living by themselves. People are together. There can be good situations to come out of that as well. So, drawbacks to this is that there's potentially higher turnover or more management, because if you, instead of, single family house, you're renting, the 4 bedroom house to one family, you're renting it to four different individuals who might be there for a month or 6 months or a year. And that's for each room. So you're having to deal with more turnover. You also have to furnish certain things like, the kitchen. If there's a living space, put a couch there, dining room table. So more management is involved as well. But with, the right systems and property managers, you can offset that and make the cash flow actually work. So when I've been looking at things, that's the main way I've been looking. Um, so financing options for real estate right now. Some ways that I would recommend for people to get into investing in real estate. Here we go. So house hacking is a great one. You can live in part of the house and rent out the rest. If that's a single family house, you can rent, you live it if you're a single person or you don't need a lot of space, or a couple, you can live in one room, then rent out the other rooms. And if you do that, you could potentially do even a loan with, 3.5% down or even 0% down if you go through some credit unions here have 0% down loans if you haven't owned a house in the past couple of years. So you could buy a house with 0% down, move into one of the rooms, rent out the other rooms for, 700 to 900 bucks a month and be making money, and buy a house with nothing down and be making money every month. Or if you do a duplex, triplex, or fourplex, you can also buy it as a primary home. with 3.5 or 5% down, and then rent out the other units as well. So another way that you could potentially be making money by buying a place. DSCR loans, if it's not possible for you to live in the property, you can also buy it with a loan with a regular loan. Most loans will require you to put 20% down, and some of them will depend on your personal income. But DSCR loans are debt service coverage ratio loans, and that does not depend necessarily on your income. Sometimes they'll take a look at your credit, but it's basically a loan that is not based on you, it's based on the property's performance and the property's potential income. So that's a great investor loan. Usually it requires 15, 20, or 25% down, depending on the property. But it's a great way to get financing for a property without having to use your own income to qualify for it. We can also look at subject to or wraps. That's basically an option where you take over the existing financing on a house. So let's say someone is underwater in their house, they owe more than it's worth, but you could rent it for a good amount, they, or maybe they don't owe more than it's worth, but it's close. Maybe they just bought in the last year or two and they haven't paid down their mortgage enough. And if they were going to sell it, they'd have to pay realtor commissions. And so they would actually have to bring money to to the closing table. So they might actually have to pay to sell their house if it's close. If they've only owned it for a couple of years, that's a potential situation. So in those situations, they may be willing to let you take over their existing loan. Um, as a subject to or a wrap where you basically make a payment to them. So, subject to normally you can pay the lender directly, like you pay their mortgage company for them. A wrap, maybe you pay them, the seller, and then they pay their mortgage from that. Or there's third-party service providers where you pay it into that and then they pay the mortgage. So there's some options there that would be good. And then seller financing is awesome. Very cool opportunity when that happens. And that's usually when the seller owns the property outright, typically, or they owe enough where you could pay that off for with your down payment. But basically, the seller becomes the bank, and you can directly negotiate terms with the sellers. So, say they own a house for $500,000, they can sell it to you on whatever terms they want. You can set any interest rate, you can set any term, any length of the loan, any amount down. So yeah, I had one recently. It ended up not working out, but it was, $650,000. They were only asking 4% and they were going to do interest only payments. So that'd be it. And then they were also only asking 5% down. So 5% down, 4% interest only payments, and a 3-year balloon. It didn't end up working out because it wouldn't have cash flow. It would have broken even on rent. And then the refinance at the end of the balloon would have been a little bit difficult because of so little down. The refinance, I probably would have had to bring more money to pay down. So I would have a higher loan to value ratio or lower, sorry. So yeah, it ended up not working out, but it was a really cool opportunity and would have been a really good one for someone as a primary because when they refinanced, they wouldn't have had to have as much down, which would have been fine. But yeah, really interesting opportunities there. So right now, my take on the best opportunity in Coeur d'Alene is co-living. Out of all those opportunities, that's because when if just buying a single family residence, if you can add bedrooms, you can rent it out by the room, you can get some pretty insane cash on cash or cash flow on a property, either with a loan or seller finance or creative finance. And so I would highly recommend this strategy right now. There's really high demand in Coeur d'Alene and Kootenai County in general for low income housing and people just wanting to rent a room. So I would focus my attention there out of all the opportunities right now. What are the houses um, with larger floor plans, open floor plans where you could add more bedrooms, high bathrooms. That's an amazing opportunity right now. And so, steps to get started, please reach out to us for a free strategy session. We do this all the time, talking to people about what they want out of their investing, how we can help them, how we can help them find properties that would actually work for them, get the financing in line. We'll send you custom investment property reports, like based on what it sounds like you want to do. Here's a handful of, potential properties, and then we continually send you, custom reports and custom lists of houses that could potentially work for you. We analyze deals together, to maximize returns. We look at different strategies like, okay, here's this house. This looks like a deal. What should we do here? Should we do co-living? Should we do single family? Should we do something else? And then connecting you with investor-friendly lenders if you need a loan, and then also property managers. We have, a great handful of lenders and managers. And then one thing that's also very valuable from what we found with our investor clients is actually walking the properties with you to identify the hidden value. So if there's a single family house in Coeur d'Alene and and you think it might be a good idea, it might be good for co-living. It's got some different weird spaces. We go walk in, we say, okay, we'd add a wall here, we'd add a bathroom there, we would change this, we would change that, we would change the layout this way to try to maximize the revenue, potential revenue for that property, maximize the cash flow. So we will do a strategy session with you. We'll send you houses we think would be good. We'll analyze deals with you, connect you with resources that you might need, either lenders or property managers, and potentially investors as well. And then walking the properties with you to say, here's what we would do. I'll go look at a property for you. I'll go look at a property with you. Get property managers to go with us and check them out as well to tell us what they think. That's yeah, something that I would highly recommend. So please reach out if this is something that you'd like, if this is something you're interested in. If you're interested in, growing your real estate portfolio, whether you're a seasoned investor, experienced investor, or you're brand new, we work with everybody. I have a handful of people from, that I'm working with that are in all different categories. People who have their own rentals already, people that this is their first one. Yeah, we work with everyone and would love to be a resource for you. So here's my email address and phone number, 208-606-0896, 208-606-0896. And my name is Sam, and I'm with the Zach Davis Group at Keller Williams in Coeur d'Alene. So yeah, please reach out to us. Again, Sam Schold with Keller Williams in Coeur d'Alene, and we would love to hear from you and yeah, help you find potential rental properties in Coeur d'Alene. Thank you guys so much, and hope you have a great evening. Thanks.